All right. Well, good morning, everyone. Is that an echo? So we are here today to talk about institutional DeFi. As you are probably all aware, there are so many ways for institutions to get involved with DeFi today, and more than ever today, there are institutions that are getting involved. So I'm going to introduce myself, and then each of the panelists can introduce themselves. And with that, we will follow up with about 4 to 5 questions that have been curated through submissions by the attendees at the conference, as well as the organizers of the conference. And each of the panelists will address the same question for about 4 to 5 minutes. And at the end of it, we will wrap up with some key takeaways. What I would encourage all of you in the audience to do is to, through the discussion, think about how that lines up with your interests, whether it's your investment thesis, whether it's your next role. And after the panel is over, please feel free to come up to any one of us, continue the conversation, and get connected. So with that, I'm Akshi Federici. I'm a partner at Kraken Ventures. At Kraken Ventures, DeFi is one of our core verticals. We invest at the seed stage, both with token and equity investments. And with us on stage here today, we have Rebecca Rettig from Aave. We also have Lisa Cuesta at Aztec, and Andrew Keys from DARMA Capital. So would you like to go ahead and introduce yourself, Rebecca?
Sure. So my name is Rebecca Rettig. I'm general counsel at the Aave companies, which is a group of software development companies based in Europe that develops open source blockchain-based software. We developed the Aave protocol, which is an open source, non-custodial, decentralized liquidity protocol that runs autonomously on Ethereum. And there's been an announcement that we also developed the technology underlying what's known as Aave Arc, which is going to be launched very soon, and it is a permissioned grade version of the Aave protocol. So the technology is the same, but there's a set of smart contracts on top for whitelisting, and as I'm sure we'll get into with some of the questions, it came to be because there was a lot of institutional interest that came to Aave about how can we use the software, we have all these requirements, what do we do? So I'll talk more about that as we get into the questions.
Hi, everyone. I'm Lisa Cuesta, and I'm the head of business development at Aztec Protocol. Aztec has been in research and development mode, building its ZK rollup for the past few years to help bring scalability and privacy to Ethereum. And so, relevant to this conversation, institutions likely will need privacy in order to interact directly with DeFi, and we're looking to enable that. In a prior life, I was also on the asset management side, working on the crypto task force at Brown Advisory, which is a $150 billion asset management firm, and so very familiar with the inner workings of making decisions at that level for the crypto strategy.
So for those of you who don't know me, my name is Satoshi Nakamoto. Andrew Keys, prior life, was on the founding team of Consensus, built Truffle and Fiora MetaMask, created the first derivative to sit on top of Ethereum. Run DARMA Capital now, just over $1.5 billion under management. Commodity pool operator, commodity trading advisor under the purview of the CFTC. I'm going to be a little thorny and say that, frankly, we can't use DeFi in its current context within that purview of regulatory purview. We have a flagship product, which is essentially quantitative systematic alpha of Ether. So simply put, generating more Ether denominated in Ether terms. We run about 10,000 validators staking and generating that yield on Ethereum. We also do lending and trading to generate that Ether. We have a swap facility specifically for Filecoin miners to basically offer lending for them to be able to stake Filecoin that gets submitted to the Chicago Mercantile Exchange's swap data repository. So another way where institutions can comply with DeFi, or let's just call it crypto. And then lastly, we are launching a layer 2 scaling solution called NAMI, which is specifically meant for institutional constraints. So instant finality, low latency, predictable fees, but we can also have a whitelisting functionality so the counterparties can interact with each other.
Okay, I know Akshi is moderating, but since you started this thorny thing, what do you feel like you need to be able to interact with DeFi in your current iteration?
So exactly what you're creating, where counterparty, right now, counterparty A can go onto Uniswap and trade $5 million of anything for $5 million of anything with any other party. And Gensler's is bringing the hammer, FinCEN's coming, entire FSOC is here, and it's going to get worse, full stop. While it's amazing technology, there's going to be rails that are necessary to be put around that. So, very similar to what you're doing, we've kind of done that at a layer 2, where we can provide kind of high frequency volume as well.
So that's great.
And then another one is the concept of instant finality. So a lot of the optimistic rollups are 7 days, and it's table stakes that you have to have finality immediately. True custodians aren't going to wait 7 days. And then I would say, lastly, striking NAV. So striking NAV on a daily, weekly, monthly basis is very difficult within basically the constraints of just pure public permissionless networks. Versus if you have it on a centralized exchange, unfortunately, you're able to get trade confirms realistically.
So this is great discussion, and we will have a lot more of it. We will have a lot more of the sort of like uncensored, what are the challenges. But for the audience, especially taking a step back, let's start off with maybe Lisa. You can start off with this. Was why is it important for institutions? Is it important that they are getting into DeFi? And as they are getting into DeFi, how is that going to impact the broader DeFi ecosystem? As you answer that question, also feel free to define institutions, because I think that there are several different definitions. Like, what's yours?
Yeah, so institutions is a really broad categorization, and there's a lot of different players within that. So I think on the most active end of the spectrum, you're talking crypto-dedicated funds and crypto-native funds. But what's really interesting is starting to see more generalized funds, including venture funds and hedge funds, including tokens into their documentation and saying, we want the latitude and the ability to actually participate directly in tokens, and then by extension, DeFi. So I'd say they're probably the next on the spectrum. And then when you think about where I was coming from on the asset management side, I would say that's more the allocators, who are endowments, pension foundations, who currently are looking at this as, if anything, a venture allocation. So very risky, high risk, high reward. They are going to take a while to go directly into DeFi, but the way that they will get exposure is through a combination of external managers, and that includes venture and hedge funds, both crypto specific and generalist, but also looking at different kind of strategies like Bitwise and others that are kind of allowing them to abstract the complexity and not necessarily have to go directly into any equity investments, but have exposure. And then another way that they get exposure is also through public investments. So they look at companies like Tesla and Square and others that have allocation into Bitcoin and say, we do have some allocation through this to show that to their clients that they are getting access to this opportunity, even if it's not directly to the tokens. I think where they are today is talking about custodianship of Bitcoin and Litecoin, and it's pretty far off from getting a DeFi-specific strategy, at least on the allocator side. But the way that they're addressing that is by going through external managers who are more familiar with the tech stack required to go through this safely.
I will say that financial institutions, and I think there is this huge spectrum, right? Like crypto-dedicated funds all the way to, I would say on the other side, central banks. They're in big-time education mode. We are getting a lot of inbounds just of, can you do a DeFi 101 for us? How do we get into this? What does it mean? Including from central banks. So you're right, they're not allocating yet, but they're not thinking about it. In terms of, is it important for institutions to be in DeFi? Critically. And I know that, I'm a very crypto native person. I've been a lawyer in this space for the last 5 years, which as a lawyer makes me an ancient person in crypto, I think. And Consensus was actually one of my very early clients. we're not going to get widespread adoption until somebody like JP Morgan is like, yeah, we're in Aave Arc, right? There are people in the middle of the country where I am from. I'm from a very small town in Illinois. You know, maybe they know about Bitcoin, but the way that there's going to be that DeFi is just going to become Fi, you know, it's just going to be finance, and part of the way we transact and interact is if institutions give it validity and make it seem safe. And Andrew is completely right. We are going to see a massive spike just in the regulatory interest. They are educating themselves. They are pursuing, as we've all seen, known, and heard about in the last, let's say, month or 2 months. And so there's going to be a lot of things that happen at once, but institutions getting in is going to make it very valid for just retail investors to also be in.
Yeah, and they follow each other. Like you were alluding to, once one does it, it legitimizes it for others. And I think as those institutions come on board, that's just going to open the floodgates, not only from a capital perspective and an allocation perspective, but also from an entrepreneurship perspective, because there's a lot of entrepreneurs in Web 2 that, you know, have a lot of knowledge about how these institutions work, and once those institutions are coming on board, can build new business models and new businesses to support them. So it'll be incredible both for the ecosystem from a company building perspective, but also from an allocation perspective. Once you break beyond just like looking at this as a venture classification and you start to have adoption across the portfolio.
Andrew, did you have?
Agree.
Great. So this question is more in line with the discussion you guys were kicking off with, which is, what are some of the challenges that institutions are facing when they're interacting with DeFi, and then how are the various DeFi projects out there addressing those challenges? Do you want to?
So I can kick that.
Yep.
So I would say Finality, AML KYC, custodianship, latency, gas fees are I would say table stakes to walk in the door.
The other challenge that they're really facing, and maybe this is just like inherent in all the things you just listed, is like literally the technology to interact with DeFi. So if you're a financial institution, you're not just like, cool, I have a MetaMask and we'll just like connect into the Aave protocol.
It's the integrations.
It's not just the integrations, right? You have a whole set of processes and procedures, a financial institution. Yes, but also the finality part. Like we don't have reversible transactions.
Right.
So what are we going to do to the point? Well, also who's custodying our assets and how do we get into it?
Right.
Who is holding our MetaMask? Because a MetaMask for MetaMask is creating an institutional grade product, obviously, but those kinds of how to plug into DeFi in a compliant way that works with all the rules and regs that are going on are there. And then again, this is probably somewhat inherent in what Andrew was saying, but the KYC AML, how to comply with the Bank Secrecy Act, the FATF guidelines, all of the things that are out there. So I think those are part of it.
Another thing I'd be curious to get your perspective on is the transparency of crypto and what that means for institutions, because most of them want to deploy strategies that are proprietary, and so Aztec is really interested, obviously, in bringing privacy to crypto and enabling institutions to kind of conceal the details of their portfolios.
100%, I just forgot it,
yeah.
but I shouldn't, because it's confidentiality and kind of the ZK snark layout and plonks and what's going on in that, it's spectacular work, and I think it's table stakes.
So that was some of the challenges, right? And what are some of the ways, and you mentioned a few, that the DeFi projects are addressing those then?
So I think what Aave is creating is super cool. Again, we're creating a layer 2 that applications like Aave can sit on, that kind of table stake concepts like KYC, instant finality, low latency, and create these kind of networks that are still anchored in public permissionless Ethereum. So I think that the trade-off you don't want to make is like the concept is really to decentralize these things and rather have kind of subjective institutions providing trust. We evolve to objective mathematics within a concept or within the regulatory constraints.
Yeah, I mean, I once Aave Arc was announced, it was like the prior iteration was called Aave Pro, but we had lots of people reach out to us and say like, oh, how are you doing what you're doing? And the other piece of it is, it's not just DeFi projects or software developers that are creating these, but there are also native compliance solutions that are coming to pass. So on-chain KYC and other things like that that are going to plug right into all the, at least in the United States, the BSA requirements and things like that, so you can track transactions. And I think you're going to see enhanced transaction monitoring. And all the analytics companies are really developing things. So the native compliance solutions that plug into the technology in the right way are going to be critically important. And then, you know, I think I do agree with Andrew. I think Aave Arc is a really exciting development, and it's something that institutions were asking for, and so we did it.
So one other thing that, and obviously the confidentiality and privacy, and then to be able to plug in fund administration, to be able to strike NAV, to be able to get that trade data, you know, CSV it, et cetera, and then make that trade administration.
Is somebody doing that?
Not really, not simply, you know, and not on chain simply.
Yeah.
And it's really bespoke and it's really laborious. We have a separate accountant altogether that deals with stuff that's on chain for not the actual CFTC registered fund, but like the venture arm, and it's a total nightmare.
I do think that there's this massive opportunity for software developers to put together this kind of technology, one that Andrew's talking about, also for the what I was talking about in terms of like how do you create a wallet that works for institutions and things like that. So I do think that there's a real opportunity there.
And I think another trend that's been interesting is seeing the movement from centralized to decentralized, which is like very obvious in terms of like just the movement in general, but we have seen this kind of focus on, you know, centralized solutions over the years because that's what abstracted the complexity and brought these services together. But I think over time where things will move is towards these like different decentralized solutions where you can kind of piece together what works for you. And so that will not be adopted by institutions immediately, but if you can imagine like having, you know, KYC tokens, for example, that's something that people are talking about and thinking about. Like, how can you actually have KYC on the token level? Or how can you have a non-transferable NFT in your wallet that shows that you've been KYC'd for certain standards? So I think that over time, it'll become more of a decentralized solution. But in the meantime, you're working with intermediaries, and it's this really complicated stack of service providers that you're working with that are just really intimidating and new and unfamiliar to institutions.
So this wasn't part of the original questions list, but very quickly, is there a geographic view that you have of adoption by institutions? Is there like a different rate? Obviously, there are different challenges from a regulation perspective, but what are your thoughts about the global?
I will say there are more forward-thinking institutions that I have at least encountered in Europe right now who may have already done this education phase and are looking to be very, you know, crypto forward. But everybody else is sort of, if they're not, you know, handling proprietary money and are not like a straight crypto hedge fund or crypto venture fund or whatever, they're all on the same level of education, maybe within, you know, a degree or so, but otherwise, everyone's still in the, okay, there's something big here, but, you know, DeFi summer was essentially a year ago, maybe 13 months ago, so everybody, and it's really, I mean, right, the cover of The Economist was just about DeFi. There's a lot that's coming to the fore now, and so it's really just coming like, what is this? What does it mean for us? How do we get into it? That's why I think there's this huge opportunity to like, create technology that allows financial institutions to plug in a compliant way. So we're still, at least in the US and most everywhere else, including on this the central bank side, just learning about it.
Did you want to add something, Lisa?
Agreed. I think we haven't seen any large gaps. I would say it'll be interesting to see how the regulatory frameworks kind of play out and how other countries might mirror what's happening in other countries, but we're like a little bit too far off to be able to comment on that right now.
Great.
Agree.
Great.
You go first for the next one.
Yes, so Andrew, the next one's for you. You know, we talked a little bit about the various ways in which institutions are getting involved, right? There's, you know, enterprise-grade staking. You talked about fund allocation. There's governance, et cetera. And they seem to all be moving at a different pace in terms of adoption. What are the ones that you think, Andrew, are getting the most uptake, and why?
So yield. I mean, I think just yield generation and in an interest rate starved environment that we are in the traditional capital markets, the fact that you can generate 5% yield on Ether and get the potential 10x upside is like mind-boggling. But, you know, I think we kind of fast forwarded over like defining what an institution is, because the investment banks can't do that, right? Yep. So you've got family offices, crypto native funds, and I feel like the institution is a broad context. Yep. And so I think there's a ton on just yield generation, because it's a numbers game, and you can just, it's not debatable. It's a quantitative fact.
But that is why, right, these more traditional financial institutions want to learn about DeFi. Like, how is it possible that to generate that much yield, and we're doing 0.2%? You know what I mean? Like,
yeah. I also think a little bit about how Bitcoin was the gateway for institutions to dip their toe into crypto generally, and ETH2 is going to be the gateway to look at staking. So I think we're a little bit far off from that, but as you familiarize yourself with Ethereum, it becomes more well-known, and staking is an option for institutions. That'll open up their minds to, okay, well, what other proof-of-stake networks are out there? How do we get involved? What does staking look like? How do we do it?
And another great way of participation is that you don't have a counterparty with staking. So you know, you're not dealing with the kind of know my counterparty issues. This is yield generation without that counterparty.
I actually would argue that in DeFi, you almost never have a counterparty. You are interacting solely. This is what I talk about a lot, and when I do education of regulators and policymakers, it's not peer-to-peer, it's peer-to-protocol. So when you're hitting either Aave or something like Uniswap, you're interacting with the liquidity pool. You're going to say, well, there's other...
Your words to Gensler's ears and God's ears. I'm with you, sure, but
yeah, I know. I mean, I understand.
Gensler's going to...
I hear you. I understand what they think, but it's really true, right? I mean, the assets become fungible once they go in.
Totally fair.
All
totally
of that
fair.
stuff. So that's my devil's advocate side. But obviously, I understand the regulatory front, you know, and where everybody is from a mindset perspective.
And I mean, I think that's a great mantra, and that needs some unwinding of how we verbalize these concepts. But I think that is actually a great point.
It's something I talk about a lot with smart contracts because, you know, fine, you have the automaticity, so you don't have these intermediaries who like need your ID and then need the paperwork and need all those things. That's great, but because you're interacting, I do talk about this as one of the benefits of DeFi a lot, which is, well, you eliminate counterparty risk because you're just interacting with a piece of software, right? You're taking your wallet. I did a presentation to a whole group of regulators, and the way I explained how the protocol works is you take your wallet, you connect it to a piece of software, another piece of software is transferred into the piece of software, and they were kind of like, oh, so there's like really almost no humans, you know, at any point in time, but it is really technologically based if you think about how it actually works.
I think what you just described is why people will get interested in the token investments and in the space generally, because they just see how amazing of a business model it can be. And that will get them interested in actually having a piece of the action and beyond just the yield generation opportunities.
Yeah. But if you take anything away from this panel, just call it peer-to-protocol transactions, not peer-to-peer transactions.
Fair enough.
It's true. I mean, at institutions, that's an example of taking an existing process and an existing sort of front end, middle and back office type thing and applying it, right, to this space that may not be applicable, right? So I guess moving on to then decision making at institutions, right? In your interactions and experience, how do you have those discussions in institutions? How do you navigate the internal decision making processes, which can often, as we know, be long, but also the mandate for being involved in DeFi may not necessarily be coming from the top, right? So how do you navigate that? What are your tips and experiences?
Yeah, I can kick off, having been on the inside. So I'd say there's 3 different potential ways that this could come about. One is top down, which is obviously favorable because then it's a mandate from above, and usually there's resources and a budget, and you can get, you know, people on board that are dedicated to this effort, and there's accountability, et cetera. I'd say that was not the experience that I had. There's bottoms up where, you know, either internal or external. Internal would be, you know, folks internally that are like, we need to do this is important, et cetera. External would be clients demanding it, and we've seen a little bit of that where clients are like, hey, I'm allocating to Coinbase anyway, and it's your business that you're losing. So there's a little bit of urgency when you start to put those numbers together, and there's a business case there. But I think the more likely is that there's like these kind of folks internally that are the rebels that are getting together in a more organic way. And usually it's tends to be younger folks that have friends that are in the space or just are more familiar and more open to new ideas. And those folks will come together and, hopefully you can get buy-in from senior level folks. In my case, when I was working at Brown Advisory, we got a bunch of partners and CIOs involved, and that created more urgency. But the drawback is that it's no one's full-time job in that case. And so the fact that that's no one's full-time job just means it's like a portion of their week every week, and there's no real milestones or targets, or like if it doesn't happen, it's okay. And so the timelines get a little bit blurrier when it's like a more organically formed group until you have someone that's kind of willing to take that risk and say, I'm going to put my name on the line. I will get resources. I'll set up these OKRs or deadlines, et cetera, to really push this forward. But I think in the meantime, it ends up being a lot of like teach-ins from great organizations. We had a bunch of those. Yeah, we had a bunch of those. We had, some of the internal experts doing, DeFi 101, bringing in folks that they know. But that's just a little bit more, it's a little bit of a slower process until you can finally get someone to say, like, I'm going to put my full effort towards this.
And oftentimes when you're at that stage where you're purely just educating as someone on this side, you're kind of like, what is the value of this? What is the next step? What, where is this going? But totally. you just have to, there might not necessarily be a decision point at the end of it, but that is the journey that they need to get on.
They get closer. I'd say like some of those teach-ins actually have resulted in business relationships, which is great, but there's a lot that have not, and so it's kind of like a numbers game at that point.
Yeah.
So we're just building. We're contributing to the building of a layer 2 scaling solution that's optimized for institutional adoption with instant finality, privacy, low latency, the ability to have custodial functionality, and we're praying that someone can figure out how to strike nav.
Someone will do it. We've had the same experience. I'll have reach outs to somebody from a massive financial institution who went to a conference and says, I want to do a DeFi 101, and then we're in front of the CEO or the COO of, either a certain part of the bank or literally of the entire bank, or somebody, we got in because somebody came to us about NFTs and they were on the board of a big bank, and then we met with the CEO and did a DeFi 101 for him, and he was like, I literally have to go to a dark room and try to, comprehend this because he was like, because you took my entire business model and turned it on its head. And then honestly, we had a follow-up a week later where he's like, I want to do more and stuff like that. So, it is a numbers game, but if you're out there educating, it's gonna hit somebody at some bank at some point. So I think if you're in this space, you should just be dedicated to educating literally anybody you can.
We had a similar kind of reaction. Someone was like, you're making me rethink everything I know about my business.
Yeah, I guess my view on that is like it's better to educate someone and bring them over to the side that's completely on the other side, right? So that's a net +1 value add as opposed to people who are already sold, right? So even just doing that is great. So since this panel, I think it's called The Hood is Coming or something, so I kind of had to ask this. When do you guys think the hood is actually coming? Like, what is the timeline in your mind, given that it's been, I guess, coming for a while now?
I would have to trifurcate the herd, right? So
Okay.
so you have the venture funds, the hedge funds, they want absolute returns, and they can figure it out. They can put it in their subscription docs that permits this. JP Morgan et al. Is not touching DeFi until we have institutional custodianship, instant finality, AML KYC et al. And that's fine.
Yeah.
Which is 5 years is like 1,000 years in this space.
I think for them to get exposure on the allocator side is happening in the next 3 years, just in terms of like exposure through external managers primarily. In terms of having a DeFi desk, probably a decade.
Wow.
5 years for a
5
DeFi
years.
desk.
I talked to the CIO of the firm that I worked at. He thought a decade.
Great. So I know we're almost upon time, and I'm sure we can talk about DeFi all day. But to wrap up, any last comments that you guys had, as well as maybe one or two key takeaways that you want the audience to walk away with?
I just hope we transition from subjective intermediaries providing trust to objective mathematics providing trust. And we can all work together, hopefully with regulators, to create frameworks that don't stifle innovation and use this technology to its benefit.
I'd say be the advocates for folks that you know in the institutional space, and be patient, because I think this is a long game. And planting the seeds today will yield benefits in the future, and we definitely do need the institutions to come in order for this ecosystem to reach a potential I think we all know that it can.
I agree completely with both of the things that you said, or the things that you both said. I do think the most important thing we can be doing right now is educating, and not just institutions, but literally anybody who wants to listen. There are so many different ways to do it, but I think that once people understand this, and to say mathematical objective intermediaries is a very hard concept.
No intermediary.
What?
No intermediary in that one.
Not the intermediary.
But I do think that just educating and really being dedicated to this space, because it's going to be a long haul, but I think we are really revolutionizing something critically important to the world, and that's why I got into all of this a while ago. So please be patient and please stick with it.
Great. Well, thank you. Thank you, Andrew, Lisa, Rebecca, and thank you all.
Thank you.